The Kenya Bankers Association, which has a sitting with the National Assembly's Finance Committee at the KICC. KBA is presenting a memorandum which seeks to do away with the interest rate capping law. KBA, which is a lobby group for the banking sector, has been pushing for the repeal of the interest rate capping law introduced in 2016. The association says the law has hampered growth and dimmed profitability for many commercial banks. Shortly, we'll be joining Lillian Kiarie to find out what they're willing to give, because as I presume, negotiations are give and take. Lillian, if I have it correct, the KBA is seeking a repeal or the doing away with of the interest rate capping law, but what are they proposing in exchange?
If you were to visit a bank about 3 years or 4 years ago, it was actually easier for you to access credit. This is because banks had the freedom to set the rate which they were going to, charge loans for. But in 2016, a law came up, which is the interest capping law, which actually asked them to put it at about a maximum of 13%, which is 9% is actually the ceiling at which the central bank has set, and now they were given a freedom to play around with 4%. So today they're actually back trying to push for the repeal of the interest rating law, so that they can see if it is able to be scrapped off and they're able to get back the freedom. So the KBA is actually saying that they have not been able to get profits that they were getting some years back, and they're asking for this to be repealed so that they can get back their freedom and they can be able to set back their profitability. I am joined by KBA's CEO, Habilaka, who is going to tell us what has brought you back. This is not the first time that you're actually pushing for the repeal of this law. What actually brings you back here?
Actually, it's because the impact of the law has, I think, been felt in the economy. Entities, especially in the SME sector, are not accessing credit from the banking sector, and we believe that the SMEs are the engine for economic growth in the country. So if we can be able to work together to find a solution for accessing credit for the SMEs, we'll all be beneficial.
Okay, somebody actually from the panel discussion said that what evidence or what documentation have you had showing that SMEs are actually complaining that they are not able to access credit?
Actually, it's quite evident all over the place. There are a number of studies that have been done. The studies have been done by the central bank, a study has been done by KIPRA, a study has been done by the KBA, a study has been done by the World Bank, and a study has been done by the IMF. And it all comes to the same thing. The fact that SMEs in the current interest rate regime are not able to access credit from the banking sector, and therefore the growth is actually hindered from that perspective. The other point that comes out is the fact that the initial intention of the law was to ensure that SMEs are accessing credit that's affordable and available. What the law has actually done is that credit is cheap, as in it's affordable, but it's not available, especially to the segments of the economy that are most productive, and that's the SME segment.
Okay, so maybe you can tell us, you've said that people who actually have loans right now do not need to worry. Talk more about this. Why is it so?
Well, that has been a major worry from the consumer public, in the sense that the feeling has been that when the caps are removed, would we see a reversal back to the days when the rates were all over the place. Now, the assurance you are giving the banking public is the fact that those who are already borrowed from the banking sector already have existing contracts. The pricing could be, say, currently CBR plus 4. CBR plus 4 is what comes to 14%. So, and CBR currently is 9%. So, unless if the CBR moves, and that's not within the control of the banks, your pricing should remain at 13%, whether there is a cap or not. What the removal of the cap will do is that it will allow borrowers who are out there, who are not able to be priced within the cap, to now be priced. So if I can give an example, a borrower who currently, upon assessment, you find that you can price the product at, say, 15%. The law does not allow you to lend to that person at 15%. So the person is out there, unable to access credit from the banking sector, and the options they have now are going to the unregulated segment, where they are borrowing at very punitive rates, 30% plus, when they could have been able to access the banking sector and be able to borrow at 15 in an unregulated environment. So the point you're trying to put across is that the existing borrowers will remain at wherever they are priced at, but borrowers who have not been able to access credit from the banking sector, who are still out there, will now be able to be assessed based on their risk profile and be priced accordingly in an open environment.
Olive, remember, this is not the first time that KBA has actually tried to push for the repeal of this. So this means that if it actually is effected, it will shake up the sector. We will be following up on this story and we'll update you in the next subsequent bulletin. Back to you, Olive.